Managing Director in Equity Research at Wedbush Securities. Welcome to the show, Mr. Ives. As always, it's great to hear you on a weekend ahead of the earnings week. Can these companies come to save us, Dan?
Look, I mean, right now I put it as white knuckle since probably March 2020 in terms of my conversations with investors. Fear factor is just massively elevated here, and I think next week is where it shifts. I think Microsoft, Apple, Tesla, tech stalwarts, that continues to be our view. Software and chips lead us higher. Netflix was never going to lead tech higher. And I believe next week is where rubber meets the road. This starts to turn around from what's been just a Nightmare on Elm Street start to the year.
Hello everyone, I'm Steve and thanks for watching my video. I hope you all have a wonderful day. The goal of this channel is to discuss topics related to investing. If you're new to this channel, you can turn on the notification on the bottom right side of the YouTube page so you will know when the new content comes out. Today I'm going to talk about the stock market. Has the stock market bottomed? Are the S&P 500 expensive or cheap? Should you sell your stocks to buy them later? For disclosure, today's video is just my personal opinion and not investment advice. The beginning of this video is the interview of Dan Ives, the Managing Director of Equity Research, Wedbush Securities last Friday. He mentioned that Netflix is never the leader for high-tech stocks. Apple, Tesla, and Microsoft earnings will tell us more about where the market will go from here. As we have already known, the stock market has suffered huge losses since the beginning of the year. QQQ and SPY closed at a low last Friday on heavy volume. Bitcoin is now trading at 35,000 right now, losing 50% of its value. So it's likely that early next week we'll see more market volatilities and QQQ and SPY will be lower. When will we see the market rebound? Frankly, I have no idea as of right now. Should we sell or hold? I have sold some high multiple stocks, but still hold the index and big cap high-tech stocks. The 10-year Treasury, US Treasury bond yield was 1.75% as of last Friday. And SP 500 closing price as of last Friday was 4,397.94. And SP 500 2022 estimated earnings was $223.34 as shown here on this table on the left side. So the SP 500 P ratio versus 2022 earnings is 19.69 and the implied yield is 1 divided by the P ratio, which is 19.69 equals to 5.07%. If you deduct 1.75% from 5.07%, that's 3.32%, which is equals to 332 basis point, which is quite high. For example, here shows the S&P 500 earning yield versus US Treasury yield. Historically, from 1976 to present, it's on average it is a 250 basis point. So relatively the S&P 500 is pretty cheap if we use the historic the difference between the S&P 500 earning yield versus US Treasury yield. For example, if you hold the 10-year Treasury bond for 10 years, you're gonna get average return of 1.75%. And if you assume, let's say that after 10 years, the S&P 500's P is like about 19 or 20, then with expected S&P 500 growth of like 8 to 9%, we can expect next 10 years we could, if we hold the S&P 500, we could get like on average yearly return of 8 to 9%, which is pretty good. The S&P 500 2023 estimated earnings is $244.97. It can be shown here on the table on the left here. The analyst consensus here is 244.94. And if we use that number, the S&P 500's P ratio versus 2023 earnings is 17.95, which is below the 19 for the on average. So the implied yield is 5.56%. Let's say if we use, let's say with SP 500 2023 year-end price target using the same PE right now, we could get a year-end target of 4822.87. If next week we have a market drop, let's say SP 500 drop to 4,000, then we could potentially have a from 4,000 to say 4,800, we could potentially get a 20% return the rest of the year. This is a table shows a performance of 10,000 investment between January 3rd, 1995 and December 31st, 2014. If you fully invested during this period, $10,000 will become $65,000 with an average annual return of 9.85%. However, if you miss the 10 best days during the period, $10,000 will only become $32,665 with an average return of 6.1% per year. So should you sell your stocks and buy them back later? It all depends on whether you need cash now or what kind of stocks you have. If you need cash now, then you need to sell. If you do not need cash for a few years, then all depends on what kind of stocks you are holding. I will not sell the index or big cap high-tech stocks because the fundamentals are sound and they are cheaper with the recent sell-offs. Also, you have to pay taxes and you may never know where the bottom of the market is. If you miss a couple of the biggest gains, your return will be greatly reduced. Please do not listen to the doomsayers who said, oh, they're right about the stock market correction. Most likely, they have been predicting the stock market crash for the last 5 or 10 years. Nobody would predict the stock market movement accurately for a long time. Those who have made fortunes in the stock market are those who have ignored the stock volatility and held stocks like Tesla and Apple for many, many years. In 2020, Tesla stock went from over $900 to $350 pre-5-1 split, and then went up more than 10 times in a year. This is a monthly chart of Tesla stock. You can barely see the big drop from $180 to $70 post 5-to-1 split in this monthly stock chart. Also, Tesla was trading in a tight range from 2014 to 2019. Those who have been holding Tesla stock from those periods until now get rewarded handsomely. However, the stocks without earnings or high PE stocks are different stories. Right now, people are selling those concept stocks like no tomorrow. I personally sold most of the high PE stocks. Also, since some of the stocks with good fundamentals have been down so much, it is time to prepare for a list of stocks you want to buy. The best way to buy is probably dollar cost average because it's really hard to predict the exact market bottom. If you're still here, thanks for watching until the end. Please subscribe if you like my video and want me to make more videos like this. Please leave a like on this video. It will help the YouTube algorithm to push the videos to reach more people. If you want me to cover something you are interested in, please leave a comment. You are also free to upload this video to anywhere you want if you feel it might be helpful to the others. Your support is greatly appreciated.